What's going on, penny boys and gals? It's your boy, What the Duck here, and it's time for another trading class video. Alright, so what are we going over today? Well, we're going over the 25-25-50 buy-in method. So what is our 25-25-50 buy-in method? Well, it's the penny boys way of getting into an alert or a stock. And what does that mean? Well, it means it's our way of buying a stock, and it's our way of doing it in a way that gives you the least amount of risk, as well as gets you the best average possible. So let's dive right into it. So we're going to be going over a specific alert today. We're going to be going over MVIS. As you can see, we got a 50% gain from MVIS just today. This is from our previous alert. It was around 2 weeks ago. That's not bad for 2 weeks, getting a nice 50% gain. If you put $100 in there, you made $50 just by waiting around for 2 weeks. And we also had some other great alerts. As you can see, Isaiah is actually now up 100% from our alert. It was up 60% as of 12 o'clock today. IPDN, we got 94%. Riot, we got 88%. Bayak and VBIV, we also got around 40% each. Those are some great alerts. If you want to get in on that action, join us at Pennybois, which is going to be at the link provided at the bottom right hand of the screen. We have our Facebook as well as our Discord, discord.gg/btpenny. Alright, so how did we get this 50% gain from MVIS? Well, we followed the alert. So here's the original alert. As you can see, it's MVIS. It's going to be a swing play with the ideal average under 215. And he added first at 220. So what does that mean? Does that mean he put in 100% of his intended position at 220? It did not. Of course not. That's not how we do our 25-25-50 buy-in method. So what is a 25-25-50 buy-in method? Well, this is how we and penny boys get into a stock, and the way that we do it is by getting into the stock slowly. No one can predict the bottom of a stock or the final support, and no one can predict the top. If we could, then we'd all be rich, we'd be on yachts, we'd be on our private jets. And that's not the case though, because no one can do that. That's impossible. Some people get lucky and they do one really big play and they're like, oh, I'm a stock guru because I found the bottom and I found the top and I can do it 10 more times. And guess what? They can't. They can do it once, they can maybe get lucky twice, and they might get lucky 3 times. That's very unlikely. So what do we do? If we can't find the top, we can't find the bottom because we're not able to read the future, how do we make money then in the stock market? Well, we do it cautiously. So that if we get into a stock, let's say here MVIS, you got in at 220 and you put in 100% of your intended position, which means let's say you wanted to put in $100 into MVIS, because at Penny Boys we trade with a plan. We go into a trade knowing exactly how much you want to put into that trade. We don't just start throwing money randomly at the stock market. That's how you lose money. So we already know that we're going to be putting in 100% of our intended position. So if we got in 100% at 220, what would have happened? Well, it would have gone down and we would have become a bag holder. We might have stopped out. We might have gotten frustrated. We might have traded emotionally. But what we do is we don't get in 100% of our intended position right away. So now if you were trading like a penny boy in the Penny Boys alert service, you would have gotten in slowly. So 25-25-50 in theory means that you start out by putting in 25% of your intended position. So for us, we were going to say $100 is our intended position. You would put in $25. And when the stock goes down a little bit, you put in another 25%, which would be another $25. And then once you finally see some confirmation, you see some uptrend, and you really think that it's going to start going up, that's when you put in your $50. That's when you put in your final 50%. Hence 25-25-50 is 25%, 25%, 50% of your intended position. Now, those are just guidelines. That's just the name of our buying method. It doesn't mean you have to do 25%, 25%, 50%. It just means that the theory that we follow is getting in slowly. So you can do 10%, 10%, 10%, 10%, 20%, and then 40%. You can do 15%, 15%, and then you can do 30% after that, and then 40%. You can do 5%, 5%, and then 10%, and then 20%, and then you can do another 20% and then 40%. It doesn't matter exactly how you do it, as long as you go into the play knowing I'm putting this amount of money in, so in this case $100, and I'm not going to do it all at once. I'm going to do it slowly. So in this case, it was alerted at 220 because our alerter knew, there's a good chance that this stock is going to go up based off of fundamentals or technical analysis, but because we can't find the bottom, we're going to get in slowly. We're going to get in early because a lot of people might have been seeing MVIS, maybe the past couple days or just today when it was running already at, like, let's say 230, 240, 250. They might have gotten in at 250 because they see it running, and guess what? They would have to sell at 260. That's only 10 cents as far as the gain goes, and the percentage would be even smaller than that. So that's not a great trade. That's not a great win. In order to get a great win, you want a good percentage of profit. In order to do that, you want a lower average. So unless you were able to read the future and see that the lowest price of the stock would be at in the near future would be around $1.90, you want to get in early and then you want to get in slow. So in this case, we got in early around 220. You could have bought with, let's say, $10 out of your $100. That's 10%. When the stock went down a little bit, and say it went down to $1.95 or even $2, you could have put in another $10. Now you're in $20. You're in 20%. It went down a little bit more. Now it's at $1.98. You put in $20. Now you're in 40%. It goes down even some more. Now it's at like $1.95. You're putting in now, let's say you put in $30. Now you're in 70%. So you just did a 10, 10, 10, 30. And then when you finally see the upward confirmation, so let's say it's going, it just hit that $2 and let's say $2.05, you see it's really starting to go up. Then you put in your final buy at 30%. So you put in your last 30%. In this case, now you're in $100. So what does that do? Well, instead of having an average of 220, which you would have had if you got in 100% right away, now your average is lower. Your average might be around, let's say, $2, or your average might be around like 198. That's a much better average than 220. And now if you're selling at 260, you're making better profit because the profit from $2 to 260 is a lot better than the profit from 220 to 260. So basically the way that we do that is by buying in slow. So you do a small buy, another small buy, another small buy. You might not even do them within the same day. You might do one buy on Monday, another buy on Tuesday. You might wait until Friday to make your next buy, and then wait till next week, Wednesday, to make another buy, and then wait until Friday of that week to make another buy, and then you can do your final buy, let's just say the following week after that on Monday, and then it skyrockets and it goes up, and that's how you slowly get into a position. So like I said, it does not have to be all in the same day, and you definitely do not want it to be all in at once. You don't want to put all $100 in your first buy. You want to do it slowly, and you want to do it patiently. And then only when you see the upper confirmation is when you're going to be putting in your final buy, which in this case would be just recently. See, some traders like to wait until the stock starts to really go up before getting in. So they might have gotten in around 230s when they saw that, or 240 maybe, and they wouldn't have made a lot of money. And then some people like to go in all in 100% when they first see that the stock went down. So as you see it went down to 220, people might think, oh, it's going to go right back up. But it didn't. It went down again. It went up and then went down again, and then went up and then went down again. So we're using that up and down to get our small buys and to get the best average possible. Now, this is not averaging down. Yes, you're getting a better average, but that's not averaging down. Averaging down only happens when you're in 100% of your intended position. Averaging down only happens when you're already all in and you're like, oh, darn, it's going down even more. I'm going to buy some more. And that's when you average down. That's when let's say you already put $100 in, and then it goes down to $1.50. Then you would be averaging down. But what we're doing is we're not averaging down. We're just getting a better price. It's like a car payment. When you get a car, you can either go all in. You can buy the whole car for, let's say, like $10,000, or we can make some small payments. You can make a payment, let's say, every week or every month. You can do weekly payments, monthly payments. This is what we're doing. We're doing weekly or monthly payments as the stock goes down, and then eventually we'll put our last payment in, and then it'll go all the way up. It's one way of looking at it, as opposed to going all in. So, why do we do this? Well, as you see, the stocks, it goes down, and then it comes back up, but it was a fake out. and then went all the way back down again, and then went down even some more. So we're using that to get the best average possible. We are, in theory, we're watering our garden. We're letting our plants flourish. We're not just plopping a plant right in there and putting some sunlight and some rainwater onto it and hoping that it grows. No, we're slowly getting into it. We're slowly getting our average to where we want it to be. And the reason we do that is so we get the best profit possible, we get the best average possible, and we don't have as much risk. If you have, let's say, a 10% stop loss, or your stop loss is at a certain area where you're only okay with losing so much money. If you get in all in at 220, then you might have ended up stopping out by the time it went down to 190 or 195. Whereas in this case, because you're not all in, you don't have to have that stop loss yet because you're still building your position. So I hope that helped. That is how we do our 25-25-50 rule. And the way to do that is by buying in slow and by being cautious and by being patient. And when we do that, we end up making money. As you can see, we had one of our members here make some great profit, a great winner, and like they said, huge patience pays off. They got 160% profit because they were patient, they bought in slow, they were steady, they followed their plan, they got the best average possible, and then when the stock went up, they had the best percentage. They got 160%. If they had gone all in, they might have only gotten, let's say, 80% profit. Or they might have stopped out because they wouldn't be able to get that average. They would have ended up stopping out instead. So, if you have any questions, definitely let me know. You can let me know in our live stream chat, which is going on currently. Or you can go to our new members program, which is going to be at our Discord at discord.gg/btpenny. You can ask the questions there. I'll be happy to go over any of the questions you have about our 25-25-50 rule. But basically, what you want to take away from this class is 25-25-50 is a suggestion. You can do whatever percentages you want. You can do 10%, 10%, 10%, 10%, 10%, 10%, 10%, and then 30%. You can do 20%, 20%, another 20%, and then 40%. You can do whatever you like. Just figure out what works for you and make a plan and follow it. And don't go all in right away. And remember, your buy-ins do not have to be the same day. It can be over a week's time. It can be over 2 weeks' time, or as long as it takes for you to get the best average possible and for you to wait for that upward confirmation. So remember, be patient, don't trade emotionally, and don't go all in all at once. I hope that helped. And like I said, you can ask any questions you like at the new members program. We hope to see you there. I hope to see you there so you can join me, What the Duck, and together we can make some bread.